At a session of NUS Business School's Leadership Dialogue series, Peter Seah, chairman of Singapore's DBS Bank, spoke about dramatic changes in the banking industry, the introduction of new technologies, and the challenges these pose to industry leaders. With the shift of economic power towards Asia, he argued, it is time to look at re-ranking the global banking structure and the status of Asian banks within it.
The old view has been that the banks of the developed economies are the strong banks and the better run banks. Is it still relevant in today's context?
Following recent volatility in the business climate, Seah called for a shift away from attempts to copy Western management methods. Instead, he says, it is time for firms operating in Asia to move towards a more Asian-focused business model.
My view is that successful navigation of the Asian terrain therefore requires a better understanding of the cultures and the subtleties of Asian culture. They may vary from country to country, but the underlying Asian values do not vary very much.
After his speech, reporter Maura Fogarty sat down with the DBS chief. She began by asking him to explain the thinking behind his call for a re-rating of Asian banks versus their Western counterparts.
When you start looking at Asia, you need to rethink about, is it correct that we've always placed the banks of the developed economies as stronger, better managed, and therefore borrow their ways of management? If you look at it today, all the Asian banks from the major Asian banks are very strong, the balance sheets. They have been prudentially managed. They know the Asian terrain much better than their counterparts from the West. So, from an Asian context, right, are we perhaps not rating them appropriately as the banks that are actually in a better position to provide the financing and the economic growth for the region?
Beyond basic management skills, are there other skills or perspectives that Asian CEOs should possess that would help them, for example, if they're running a bank, be poised to be more successful than a Western bank trying to do business here in Asia?
The leadership of Asian banks understand the terrain, understand Asian values, have better connectivity, and therefore they ought to be better placed to benefit from the Asian growth. They ought to be better at handling Asian business. They ought to be better at managing their organizations if they are going to be focused in Asia. Right, and it's not about the fact that the leadership are smarter or better. It's just a question of knowing the landscape, knowing the value systems puts you at an advantage.
You mentioned that the Asian way of doing business often includes the ability to focus on the long term. Why do you think that Asian companies are better equipped to deal with this than their Western counterparts?
Asian companies tend to plan on a longer term basis, tend to build businesses for the long term, as opposed to a Western culture of quarterly reporting, focusing on what you're producing for the next 3 months, 6 months, and therefore it's very challenging when you have to report your numbers every 3 months, right? To do things that may be good for the long term, but at the expense to the short term, and that's something that Asian companies must think about, and hopefully Asian shareholders must learn to appreciate that when they invest in Asian companies, they're investing in companies that are built for the longer term. And that's Asian culture. And Asian business is done through a lot of relationships that stretch over generations, and that type of a relationship actually strengthens the bond particularly for banks, between the banks and their customers. Something which I think is not so evident in the Western economies.
Given what's happening in the global economic environment and the tighter regulations imposed on banks, when you plan for the long term, what issues come to mind, and how do you deal with that given the pressing needs of the short term?
In the environment today, you have to be cognizant of the challenges, the short-term challenges, the issues in Europe, in US, the possible impact on Asia, on the world. And therefore, you need to have short-term crisis management plans in place. And you need to address how you get through this difficult period. But that should not deviate you from how you intend to position your organization for the longer term. And that may require you to continue to make investments in infrastructure, in people, in R&D, right? So that when the worst is over, you emerge as a much stronger organization.
When it comes to talent, developing talent, nurturing talent, how is DBS coping right now in the face of intense competition for good talent, and in terms of the changes that we're seeing in compensation structure as well?
Compensation is just one factor in retaining talent. It's the challenges you give them, the training you give them, and above all, the creation of a passion to want to be part of a growing organization. And I think DBS, presents a very exciting opportunity for a lot of young people because, if we succeed to be one of the leading banks in Asia, and if you look at the way Asia is growing, we're going to be a very large and strong and organization with a lot of career opportunities.